Hi, I'm Teri, and you're watching the Modest Economist channel. Welcome to 2022. One investment topic that I've been very focused on recently is liquidity. And the reason I've been focused on liquidity is that I'm interested in learning more about what non-fungible tokens are. As part of the evolving crypto world, they seem to be getting a lot of interest, and I really had no idea what they were or what they were worth or what you do with them. So the research starts. And the way that I start research is by looking at liquidity. In other words, how big is this market? And if I invest in this market and I need to sell, am I going to be able to sell? In the stock market, we can measure liquidity risk by looking at the size of the company, large cap, mid cap, small cap. How well capitalized a company is going to tell us things like how many shares are outstanding, how many shares are traded on a daily basis, and give us a good idea of the liquidity and the risk of investing in that company. The same thing is true in the bond market. And as an example of size, the U.S. Treasury market, bills, notes, and bonds, is about 18 trillion in size. So that does not include the equity market, that does not include corporate bonds or municipal bonds or non-dollar bonds. That's just the U.S. Treasury market. What we know, if we own U.S. Treasuries, is that we can sell them anytime. That is a liquid market. In fact, the U.S. Treasury market is the most liquid market in the world. So that's a good benchmark when we're looking at other things to invest in and looking at liquidity. By comparison, the value of Bitcoin, even with the big sell-off yesterday, is about 650 billion. Of course, that sounds like it must be a huge market. It's a huge number, but compared to the Treasury market, it's less than 3%. So in terms of liquidity, just on face value and market value, we know that it is not going to be as liquid. When I looked at the current market value of NFTs, that was much, much smaller. And of course, we don't know for sure that the data is accurate, but it was about 12 billion. So again, for an individual thinking about a size of a market, that does sound like a very big market and it must be liquid, but it doesn't necessarily follow. What does follow is the idea that riskier assets that provide bigger returns are less liquid. And so that's something to think about when you are possibly considering one of the now 120 cryptocurrencies to invest in, that it is still a relatively small market compared to the size and the depth of the US equity market, the US bond market, and even the markets in other countries. Full disclosure, I did buy 10 shares of Coinbase, which is the exchange for Bitcoin, the primary exchange for Bitcoin, when it first came out last year. And as expected, my investment right now is worth about half of what I paid for Coinbase shares. But I'm not surprised. I know that if the shares of the exchange track the price of Bitcoin, it's going to be very, very volatile. So I didn't invest a lot of money, but I did it as an experiment because I do want to learn more and I did want to see what happens. The other reason that I decided to buy Coinbase shares is that Coinbase, the company, is listed on the New York Stock Exchange. And getting a listing on the New York Stock Exchange is not easy. Not any company or every company can actually get listed. So it is regulated under the SEC, and I know that I have some recourse if something goes wrong. What I understand with many of the cryptocurrencies is that you have no recourse. if something goes wrong. You just lose your money and there's no way to retrieve it. I'm not ready for that yet. As we go through 2022, I am going to talk more about this. I actually find the evolution of a new market and a new type of asset fascinating. But I want you to remember, when you're thinking about making an investment, what is the size of the market? What is the liquidity? And what does that mean for risk? Because if you're completely honest with yourself about the risks that you're taking, whether you make money or lose money, you have a better idea of what to expect. I'll close with that thought. I thank you for joining me again as we start another year, and look forward to seeing you either on the Modest Economist website or in my next video. Thank you.